Hello traders and investors, welcome back to the Trend Trader channel. Over the weekend, the governing party of China held its conference. One of the things that came out of that conference was the image of the removal of the previous leader of the governing party. Whether that has any correlation with what happened on the stock market on Monday, it's something that we cannot speculate on. But some media houses have already linked these two events. You can see that CNBC, they recorded that some Chinese technology stocks, they fell following that conference. Same thing is reported by the Financial Times that the tech stocks fell when Comrade Xi was strengthening his political power within the party and the country. It is the similar headline that we see with the Wall Street Journal. Some of these companies, they fell. But from a trading perspective, let us see what is happening in the market. First, if you look at the general market index that is trading in Hong Kong, we can see that the market has been weak for quite some time. So we are looking at the Seng index. When we look at this, it is evident that the index has been on a downward move, meaning that Hong Kong market has been in a bear market. During a bear market, it is expected that the share prices are going to fall. The reason why the general market is becoming weaker is because people are selling their shares. So whether people are selling their shares due to the increasing political pressure in China, or they're selling their shares because of global recession, it is something that you have to conclude yourself. So based on this, it is no surprise that these companies, they started to fall. One of the company that we're paying attention to is Tencent. The reason why we are paying attention to Tencent, it is because this company has linked to Naspers and Prosus. Naspers invested in Tencent many years ago. Their invested grew, and then Naspers investors started to feel like there was some value that needed to be unlocked. Then Naspers created an investment company called Prosus, and there have been a series of share buybacks between Naspers and Prosus. In their explanation, it is that they were trying to unlock value. Whether that resulted in unlocking value, investors, Naspers shareholders are the ones that can give us a good answer to the question. Back to Tencent, same thing, we see that Tencent has been on a downtrend. There was a time when it traded somewhere around 750 Hong Kong dollars before it started to pull back to this previous resistance level of just below 400 Hong Kong dollars per share. That was before the share price broke below this level, before it started to consolidate between 300 Hong Kong dollars and 400 Hong Kong dollars. And then recently there was a breakdown of this support level with the retest here, and then you can see the share price started to continue to move up. We have a video on YouTube where we're showing how you can trade a breakout. What we see with Tencent is the opposite of the breakout strategy. So if you are a short person, by short we are talking about selling the shares, borrowing shares from your broker, selling them at the open market, and then buying them at a lower price. That approach would have paid off very well in this market when you look at Tencent Holdings. So as we mentioned, the share price of Tencent, it fell this morning. When the JSE opened, there was also a negative reaction from Naspers and Prosus. Now let us look at the chart of Naspers. There's no point looking at the chart of Prosus because even though the prices are different, it is still the same company. Sometime around this year, we saw that Naspers, it acted as if it was bottoming around May going to June 2022. It broke above this level, creating this gap here. Some people, they believe that gap need to be closed. We traded this position and the share price pushed all the way to about 2,800 Rand per share before it came back to 2,400 Rand per share. When the share price of Naspers started to trade below 2,500 Rand per share, then we exited our position because we just bought some of the shares as the share price was moving up. That was our way of managing our losses. Fortunately for us, with the benefit of hindsight, of course, we managed to avoid this carnage from the price of 2.2 coming down to the price of 1,700 rand per share. We understand that people are in the market for different reasons. Some people believe that this is a bargain. At the moment, for us, we remain bearish on the name. We don't have a position either on Process or Naspers. Whatever you do, make sure that you are making an informed decision. One of the stock, or another stock that has been going down, but that is other people, they like it for whatever reason that they love the stock, is NIO. We saw that NIO has been initially around 2020, following that COVID meltdown, when everything was going up. NIO was one of the beneficiaries of that bull market. Somewhere just before July 2020, we saw NIO breaking above $4 per share, and then it pushed all the way up to just shy of $70 per share. And that gave people confidence or hope that the share price of NIO was going to go up. Remember that Tesla also benefited from this. Some people that missed the ride from $100 per share to just over $1,000 per share for Tesla, they were looking for an alternative company that can give them a similar performance. NIO is one of those companies that could have given people that opportunity. Rivian is another company. Lucid is another company, but we haven't covered those companies in our YouTube channel. So we saw that the share price of NIO has been on a downtrend. Some people, they believed that they wanted to average down. There's nothing wrong with averaging down, as long as you have a conviction and you can stand the heat. So sometime just before April 2022, the stock reached the price of about $15, and since then the share price has been consolidating sideways. There's nothing wrong with the stock consolidating sideways. The problem starts when the stock breaks below that consolidation level. It's good when the stock break above that consolidation level, because that can indicate that the stock is about to trade high. But in this case, the price of NIO, it did the opposite. It break below there. So when it was trading below $15 per share, if you liked it at $70, you definitely love it at $15. That's if you believe the story of NIO. There's nothing wrong with the story. It is your money. You're going to make an informed decision for your money. So when the share prices in the Chinese stock market fell, we saw NIO now is trading just below $9 per share. Right now we are interested in seeing where NIO is going. We're not going to speculate. There's no reason to believe that the stock is going to go back to that pre-COVID levels of $4 per share. We're just sitting on the sidelines. We don't have a position. We're waiting to see what is going to happen in here. Also, another company that has been crippled by the Chinese market, whether it's government related or people just dumping the stock, the other store is Alibaba Group. We saw that sometime last year. Jack Ma started to be a stranger in the social media. Then there were a lot of speculations, but from the whole of 2021, the share price of Alibaba Group has been falling. This Alibaba Group is the one that is listed in the Hong Kong stock market, but in terms of the share price is similar to the one that is listed in the New York Security Exchange. Again, this stock, there was a time where it was promising that it could be reversing that downward trend. We're expecting Alibaba to break above this level, which would have meant that it could be a trend reversal. That was a good point to buy Alibaba. Unfortunately, it didn't happen. Same with NIO. Then the stock of Alibaba, it started to break below this consolidation level here, which was the support level. As a result, the share price is also on the downtrend. At the moment, we are not in a rush for buying Alibaba. We're still waiting for Alibaba to just fall down and then reach a period where it consolidate. Once it creates that support and resistance, if Alibaba happens to break above the resistance level, then we will be interested in buying Alibaba. So based on this and the cheapness of these stocks, however cheap they may be following this event that happened in China, we are still not interested in these companies. Another company that we looked at previously is Li Auto. It's another company that does cars in China. We saw that the stock following that IPO, it shot all the way up to about $40. The stock is listed in the US, so the price is in US dollars. So the stock has been trading up and down between this support level and this resistance level. And then there was a time around June when the share price of Li Auto broke above this resistance level. Then it came here to that previous high of about $40 there. It found resistance. When it broke below this support level, whenever a stock breaks above resistance level, that previous resistance level is expected to act as a support level. But as soon as the stock broke below that support level, then it was no surprise that the stock was going to come back to retest these previous support levels. Everything was good as long as the stock managed to stay above $17 per share. It could have been expected that it was going to bounce and then hopefully start a move up, coming back to the 30s. But as you can see, the share price of Li Auto, it is now trading below $15 per share. So one might argue that the share price of Li Auto can still come back and trade above this now this support level has been broken, so we can expect, we wouldn't be surprised, not to expect, we won't be surprised if at any time in the future the stock come back, retest this previous support level that turned resistance, and then the stock continue to trade lower. This is something, it's a probable outcome. It can happen, it may not happen. The other alternative is that the stock just continues to trade lower. So in summary, we looked at these couple of Chinese tech stocks. Some of these stocks are available in the New York Securities Exchange, depending on the broker you're using. If you're using eEquities, some of these stocks are available on eEquities. If you're using eToro, most of these stocks are available on eToro. Then if you think that it is a bargain, then you can make an informed decision. But from a technical analysis perspective, there is nothing for us. We don't have a reason to buy these stocks. That's it today that I wanted to share with you. If you found value in this video, please consider subscribing if you haven't subscribed, and please make sure that you smash that like button. If there's any company that you would like us to cover, just leave a comment in the comment section. I will see you in the next video.